Hey, option traders, we're back for another session of chart reading, right? If you're an options trader and you're trying to buy calls, sell puts, do iron condors, spreads, you still have to know which way the stock may or may not be headed in the future because your options trade will depend on it. You can't just trade options in a vacuum and not know anything about the stock. So if you're going to trade options, you have to know how to read the stock charts. It's really the only way that's going to help you be profitable as an options trader. You got to know what the charts are saying. So in this video, just like we do a lot of times, I'm going to show you the charts. I'm going to show you what I'm seeing, take my 30 years of knowledge in the industry, in the options trading industry. I'm going to show you the charts that I look at, some of the patterns that I look for the trends, look for the technical indicators that I use, all these things to help you up your options trading game because bottom line is you got to know what the stocks are doing. All right. So if you're ready, let's just jump right into it. All right. So as we do all the time, we're going to look at charts, and looking at the trends is going to be the best thing to help you decide which way the stock or index is moving. And if you want to be bullish, you don't want to get bullish on a stock that's going down. And if you're bearish, you don't want to sell a stock or buy put options or take a bearish option trade if the stock's going up. All right, so let's just look at some charts. We always start by looking at the S&P 500, the indexes. We look at the SPY, the triple Qs, the DIA, which is the diamonds. These are all the ETFs that represent these indexes, okay? These things trade like stocks, so it's very easy to trade these things. And there's options on these things. We're going to look at individual stocks as well. But we always like to take a look at the indexes first because they lead the market. Most stocks on a daily basis don't have enough news surrounding them to move them in a big way. But the indexes are, made up of all these different stocks. So the indexes could lead those individual stocks as well. So let's take a look at the S&P 500. We use the SPY here. That's the exchange traded fund, as I said. And what you see in front of you is the charts that I look at. I look at daily charts first and foremost. So each one of these vertical lines is 1 day's worth of trading. These blue lines are the channels that I've drawn. Drawing channels on your charts will definitely help you get a visual of which way a stock or index is trending. The trend is your friend. It's the most important thing to decide and see which way a stock is moving. So these blue lines, these are called trend lines, and they form channels. And in order to draw the top edge of the channel, you connect major tops along the way of the move, and you connect major bottoms along the way. It doesn't have to be exact. As you can see, there's some area here that's not within the lines. So, but we just want to get a general overview of the trend. And then on this upper chart area, I use 3 moving averages. Just going to move myself over here a little bit. We have a 20-day, a 50-day, and 200-day moving average, all simple. And the 20-day is the blue line here. Okay, this is the 20-day. Here's the 50-day. This is a red line right here, 50-day. And then the 200-day moving average right here. These are widely followed moving averages. And what are moving averages? They help define the trend as well. They help you see which way a stock is trending in the very short term, the medium term, and the long term. Hence, the 200-day is the long term, the 50-day is more of a medium term, and the 20-day moving average is a shorter term. Okay, so those help us figure out, which way a stock is trending in a short, medium, and long term. Now, down here is what we have. This is an indicator called the RSI indicator. You can see over here. It's got a 14-day look-back period. It's an oscillator that oscillates between overbought and oversold levels. And these horizontal lines are part of the RSI indicator. These are the oversold and overbought areas. I use the 80 level and the 20 level. You can configure the RSI to any levels you want. The default is 75 and 25. I widen it out to the 80 and 20 areas. That way I know if a stock is really overbought or really oversold. And what will happen is when the RSI gets down to low levels, it will also coincide with low levels price action on the chart. So you can kind of use the RSI as a warning sign or a gauge, a warning gauge of a stock may be ready to turn in the other direction. So when the RSI is at a high here, you can see the market is also at a high and probably ready to turn in the other direction. Down here is we're hitting some lows. RSI giving you a warning signal that we've got to some oversold levels and a rally could be coming. Okay. So what you really want to do is if you find a stock that you want to trade options on, before you actually trade those options, you have to look at the stock charts and see which way the stock is going. Now, as we can see, we'll go back and we'll look at, where we've come from, what we're doing. 2022 was not a great year for the stock market. Here's basically January 1st, 2022. Spent almost a whole year in the downtrend, hit the lows last October. Bullish part of the year is the last quarter of the year. October, November, December is typically seasonally a more bullish part of the year. And you can see since last October, the market has been this nice, slow grinding uptrend. And the market vacillates, in the channel. So if you're more of a shorter term trader, you want to play the moves that if the stock's in an uptrend now, you want to get your bearish trades when it's hitting along the top edge of the channel, and you want to get your bullish trades when it's hitting along the bottom edge of the channel. All right. Now, so what's been happening of late is August and September. If you watch some of my videos before, August and September seasonally are probably the two worst months of the year. October, sometimes we've had big moves in October in the past, but typically it's August and September that are mostly bearish. And you can see right here, August 1st right here, the markets come down. So August and September was bearish, these 2 months right here. Now we're in October, got a little bounce, but we've come off again. So where are we with the market as a whole? Here's the 200-day moving average right here, which is basically the last line of support for the bulls out there. You can see not only did the market move outside and below the bottom edge of the uptrending channel, but it closed on Friday, October 20th, right here. You can see this bar on the right side of the bar. There's a little dash on the right side of the bar. That's where it closed for the day. The closing price is very important because it could help determine whether, if there's going to be follow through or how a lot of the last minute orders came into the market. A lot of selling came into the market this week. Look at this. This whole week, the market was in a downtrend and it closed on the lows and it closed below the 200-day moving average right here. So what does that mean? That means the market is more in bearish mode right now, and we really could see some more selling coming next week unless the bulls come and really defend this 200-day moving average. If the market's going to go up, it has to go up from these levels right here. Okay, this is a very important area. Now, the RSI is not completely oversold, so we could get some more selling next week. There could be more selling next week in the market. So if you're bullish, if you want to be a bull, you have to take a little wait and see action here. Okay, you want to wait to see if there's going to be a bounce off this 200-day moving average next week. And what will really decide if the bulls are back in action is if the market could get back up above this lower edge of the channel. So we want to see a bounce off the 200-day moving average and get back above the lower edge of the channel and put it back inside the channel. So we're really on the last line of defense here, this 200-day moving average. So we want to see, for those bulls out there, we want to see a bounce here. But the way I'm playing it for our newsletters, we take mostly bullish trades. We sell put options. We sell put option credit spreads. Those are more bullishly oriented trades. So we're sitting on our hands right now because there's no sense of getting into bullish trades if the market wants to keep going lower. So we sit on the sidelines. There's nothing wrong with that, okay? So the S&P 500, we got to see what's going to happen early next week, if it's going to bounce or keep going. All right, let's look at the Nasdaq. We use the triple Qs to see what the Nasdaq's doing. Let this load up here for a second. So the Nasdaq was also in this uptrend here, just like the S&P 500 had some sideways action. And this line right here, this blue line, was a line that I drew probably months ago to show you where the Nasdaq has some support. Okay, so as you can see, on Friday, October 20th, closed just a hair below that blue line there, just a hair below the support. So just like the S&P 500, we're at a critical junction right now for the Nasdaq. It's sitting right on the support. It's held. This was an area where coming up was resistance. It took a little while for it to blast through. And then on the down moves, this area, which is around 300 and I'd say 355 or so, 355 on the Nasdaq, on the triple Qs, is a major area of support. So early next week, we want to see if it's going to bounce. For those bulls out there, we want to see a bounce. If not, it's going to start dropping through the support line and start heading towards the 200-day moving average right here. Okay, so let's take a look at the diamonds, which is the ETF for the Dow Industrials. Here's the symbol DIA you can see up here in the corner. The Dow for a very long time had this area of resistance. Okay, and it broke through it in the summer in July, and now it's come back down through it. So the Dow is looking pretty weak. Not only has it fallen through this support area, for a while it was resistance. Once it breaks through, then it becomes an area of support. It's broken through that. It's fallen below the 200-day moving average. It's fallen below all three moving averages. So the Dow is pretty weak here. It really is. So the Dow could have some more to fall here. The RSI is not completely oversold yet. So if I was going to say there was one of these three indexes that is the weakest, it looks like the Dow is the weakest. It's fallen pretty far below all three moving averages and could keep going. The momentum could keep going. So you want to base your option trades. You want to be smart about this. You have to decide which way is the market's trending, which way does it look like it's going. Then you put on your option trades. As I said, if you want to be bullish, you don't want to get in while a stock or index is moving lower. You want to wait for that bounce, okay? So right now the jury is out. We're sitting right on support for the S&P 500 and the Nasdaq. Dow already pretty weak. So, the Dow only has 30 stocks in it. So I don't give too much importance to that. I default more to the S&P 500. So let's start to look at some individual stocks. We look at some of these bigger NASDAQ tech stocks because these are the ones that are really move the market as a whole. So we want to concentrate on some of those. So here's the daily chart of Apple. Just for those of you that are new, you can see some of the patterns that we drew. Here's the channels. It makes it look like a very big W pattern. W patterns are typically bullish. This one was a very long W pattern. Usually W patterns happen, over a matter of days or over weeks. This one over a solid year. But this was the resistance line for a very long time for Apple. Finally broke through it in the summer and has now come back down. We drew this line, weeks ago to show where there's some support. Here's the 200-day moving average. What you can also do, if you can see this, we also have somewhat of a downtrend starting to form here. Okay. It doesn't have to be exact. You just want to get a visual of which way the stock or index is going. So Apple's coming down to some support here, has the 200-day moving average lurking below. So what I'm thinking is that, if there's more selling, Apple's going to come down to first the support here, and then if it gets through that, it'll touch upon the 200-day moving average. So a lot of stocks in the indexes right now are in bearish mode. Okay, there's more downside than we're seeing upside right now. So if you're a bear, this is a good thing for you. You can play this downside action. The market's currently in a downward trajectory. The path of least resistance right now is lower. So if you're bearish, these are better opportunities for you. If you're bullish, as I said, you want to wait until you start to see that up move happening before you actually try to get into your trades. Now, if you're a hyperactive trader, day trader, intraday trader, which means you're in and out in the same day, your trades are, in 1 minute, out maybe 5 minutes later, or in 1 hour and out the next hour. Those are intraday day trades. Now, those could you can do those all day long if you have a system for that. I'm talking about longer term trades here, months and years, okay, that you want to see which way the stock is trending. If you're a day trader, it doesn't really matter. You're going to be trading on 1 minute charts, 5 minute charts, whatever, and you're going to try to find, where there's some support and resistance. But on a longer term basis, more weeks to months here, I'm talking about the way that we do it in our newsletter, most of our trades don't last more than 2 to 3 months at best. But we really need to see the market in a certain direction, okay, to help us with our trades. So that's Apple. Once again, looking a little weak here, may come down and meet some support at the 200-day moving average next week. We need to see what's going to happen there. Let's take a look at Microsoft. These are the biggie stocks that are really moving the markets. Microsoft, here's that line that we drew a while back as a support line. So you can see that it broke through it on resistance on the upside. It's come back down here, come back down here. So it's really found some support here. Microsoft hanging around. It's above it, all three moving averages. So Microsoft is a little bit stronger here. Some sideways action. So if you're going to try to play a stronger stock, Microsoft would be stronger than Apple right now because it's not in that real downward trajectory. It's kind of holding its own here, more sideways action than anything else. So Microsoft probably going to see some more sideways action, but here's the line of support. If it does come down, if they're selling next week, here's the line of support, probably around $312, $313, and then you got the 200-day moving below. Let's take a look at Nvidia. Just a monster of a stock this year in 2023, even since last October. So you can see also sideways action been holding up, but we can certainly see where the support is, right at that $400 level. So let's draw a line in here. This is our line in the sand for, upcoming action. If I can get it steady here, we'll use it right around here. Okay. So right around 400 seems to be an area which could be holding up for Nvidia. But there's more sideways action. That's good when you got major downside action in the indexes, but these individual stocks are more sideways. That means, there's relative strength in these stocks versus the rest of the market. So now Nvidia is holding up pretty good here. Let's look at Adobe. Adobe is another strong Nasdaq stock. Also, these lines we must have drawn a while back because there's still support there. So Adobe, you can kind of see it's still in an upward trajectory. So it is a stronger stock compared to the rest of the market. So if you're bullish, you want to stick to these stocks that are holding their own and even bucking the trend. Adobe looking pretty good here, holding its own, stronger stock compared to the rest. Let's look at Google. Also in this uptrend here, fallen out of it just a little bit, but then also got back in it. We can keep the top edge here, and these lines could be redrawn. Okay, so let's get a little lower edge here one more time just to see where things are. It hasn't changed too much, but you can see it fell through it a little bit, but was hugging it and has sort of come back into the channel. So obviously you can see Google still in an uptrend. More of an uptrend than a downtrend. So once again, Google is a stronger stock compared to some of the others because it is in an uptrend. So if you're looking for more bullish stocks, Google would be a better alternative to some of the others that are moving downwards. What else is Tesla? Got to look at Tesla, and then we'll look at Netflix. Netflix had a big week this week. Tesla, crazy stock, moves all over the place. Had earnings come out the other day, and the market didn't like what it heard. Was in this congestion pattern. When you see a triangle like this is what's called a congestion pattern. The price action gets tighter and tighter and tighter until it blasts out in one direction or another. Obviously, it blasted to the downside. Here's the 200-day moving average. It's fallen below the 200-day moving average, but the RSI is starting to get a little oversold here. So some of the selling may be getting exhausted here. I won't say the selling is completely done. The RSI could get a little bit more oversold. We want to see how the price action works its way around the 200-day moving average next week. If we can get a rally, it's going to jump. But if it sells off, probably not too much more selling because the RSIs get a little oversold and a lot of the selling might be exhausted by that point. So keep an eye on Tesla. Tesla's more of a perma-bull type of stock. Everybody seems to love Tesla. So let's see if it can bounce. Let's look at Netflix. Netflix was starting to look weak until its earnings came out the other day, and then it just blasted higher. So let me show you the chart. So Netflix was looking weak, fell pretty far below the 200-day moving average here. The RSI was, getting low, looked like it had some more selling to do, and then earnings came and the stock rallied over $50 a share. So now we have this air pocket right here, this gap. It's called a gap, where there's, all this space between where it closed one day and where it opened the next day for trading. So we have this called gap. And most people like to see gaps filled, which means most people would want to see Netflix come back down and close the gap. For those bulls out there, they don't want to see that. So keep an eye on Netflix. If it can hold here on the 50-day moving average and continue to rally, then that may help pull a lot of the rest of the market up as well. But so Netflix, had good earnings. Let's take a look at some other stocks that I'll show you that clearly show it's in a downtrend. I talk about Verizon almost every time I do these videos. Verizon, clearly in a long-term downtrend. I want to get into Verizon, but the market is telling me, or the stock is telling me, not time to buy, because it just keeps going down, just keeps following the moving averages lower. So Verizon still going lower, not ready to touch it yet. Pfizer, one of the big pharmaceutical companies, Pfizer, just downtrend as well. It's not hard to see. Top left to bottom right means the stock's in a downtrend. Do not get into bullish positions when a stock's in a downtrend, and do not try to bottom pick either. You can nibble, a couple shares of stock if that's what you want to do, but don't go all in until the stock gives you a extended move to the upside. If you try to buy here because you think it's the bottom, you're going to get burned. Try to buy here because you think it's the bottom, you're going to get burned. Try to buy here, you think it's the bottom, and the stock just keeps going lower. There's no sense of trying to bottom pick because you think, it just can't go any lower. Of course it can go lower, and it is going lower. So these are the things you want to look for. Don't get into bullish trades unless the stock is telling you it's time to get into bullish trades. Now, there's also situations where you have some crazy news out there where a stock like, I'll show you some of these stocks. Walmart had this, massive quick down move. I think I talked about this recently, that it makes sense to buy because a stock like Walmart doesn't have a massive quick down move like that. It's just a knee-jerk reaction. There was some news out there that affected like food stocks. Walmart makes a lot of their revenue from their grocery sales. So there was, I think, a report came out that, people were trying to eat healthier or something. So they were going to forego buying like the lower grade types of food items like sugary foods and all that. Walmart sells a lot of food. So they got hit pretty quick, and look how fast it bounced. You don't do that to Walmart, a company like Walmart. So I bought some down here because it was just off. Something was not right about it. Okay. And just like Coca-Cola, and we'll look at Pepsi, same thing. Look how hard Coca-Cola has been hit. Look at the RSI, got it completely oversold here. It just made sense to nibble on some shares or buy some shares or buy some short-term call options to take advantage of this pop. These are called, higher probability trades. I mean, a company like Coca-Cola does not get hit that hard. It's a very stable stock. There was nothing wrong with it. And look how it has bounced back. Same with Pepsi. Pepsi, look at this. Nice uptrend, and all of a sudden it just gets slammed to the downside. It just made sense to try to buy some shares. I bought some shares down here. RSI really oversold. Coke and Pepsi are these types of companies that you hold for a very long time, years and years and years. Great dividend paying companies. When you're given an opportunity like that, you get in. Now versus, the chart like Verizon where, this thing's just slowly dripping down over the long run. There's really no, bottom picking here. I mean, yes, the market got oversold here on the RSI, but then it just keeps selling again. Okay, so you really have to understand how these charts look. Let's take a quick look in my list here, see if there's any others that are really worth taking a look at. The most important thing, as I said, is that you want to see which way the stock or index is trending. That's the most important thing. Do not get into any directional option trades unless you know which way the stock is trending. So pharmaceuticals, all same thing. Costco moving sideways, holding up. McDonald's has had a down move. Oh, Meta. So let's look at Facebook. This is Meta, also one of those stocks that pretty much run the whole market as well. Meta, nice uptrend. Look at this uptrend since last October. Moving sideways as well. A little bit of an uptrend here. So Meta is one of those more stronger stocks compared to the rest of the market. Okay, so that's really all I want to talk about here. You need to understand, look at the charts, see which way they're trending. Don't get into bullish trades if the stock's going down, and don't get into bearish trades if the stocks are going up. It will really help your profitability if you're an options trader, especially if you're a new options trader. You need to understand options are based off the stock. Okay, whatever the stock's doing, that's what the option prices are based off of. Make sure you learn how to read stock charts, okay? Down in the description of this video, I'm going to put a lot of resources. I got some easy books for you to read, some websites to look at. Take a look, spend some time reading through the description there. I've got some, other resources for you to look at. Also, on the screen here, you're going to see some videos I'm going to put up all about put option selling. That's our bread and butter. We do put option selling. I've got some videos that you can watch as well. Also, I have a free ebook all about put option selling. You can look in the description below. I got a link for that. But let's quickly go to our website, smartoptionseller.com. Move myself over here. Here's our services tab right here. Our 2 newsletters that we run. We also have our coaching sessions. If you're a new option trader and you really want to get yourself to that next level, consider our coaching service. And we have our probability calculator that you can look at as well. Also, the Put Selling Basics link, you can go onto our website and sign up for it. Fill in your name and email address here. We will send you back an email with a link to download the ebook. All right. That's it for today. Please give me a thumbs up if you think this has been helpful. Hit that red subscribe button if you want to subscribe to the channel. Leave me a comment. Send me an email. I will always answer your emails. I'm here for the community. I'm trying to help everyone up their option trading game. All right, this is Lee Lowell signing off.